Thank you for coming back from the coffee break. So let's start with things again. But before we move on to the next session, you might have noticed there's some feedback forms lying in front of you on your tables. The organizers would really appreciate your feedback on how the event is going so that they can come back with a bigger and better event next year. So please be kind enough to fill that up and return to them. The next topic of discussion requires deep understanding of market dynamics and a well-informed approach. We have the thought leaders of the kingdom joining us on the liquidity panel. So, audience, get up to welcome this dynamic personality, co-founder of Zavia and now Cash and Trade magazine. We have Mr. Hani Al-Maskati joining us on the stage to chair this panel. Hani.
Thank you very much. Assalamu alaikum, and welcome back from the coffee break to this exciting liquidity panel. Joining me in the panel today is the two distinguished gentlemen. I would like to introduce them and call them to the stage. This is Mr. Yasser Al-Sharif and Mr. Mohammed Al-Shitwi. We give them I'm going to sit في المدرج. I'm just going to sit as well in the chair just to prepare for lunch. Introducing the panel today is Mr. Yasser Al-Sharif. Mr. Yasser is the Chief Executive Officer and a board member of Al-Manafi' Holding Company. Al-Manafi' is a closed joint stock company with a capital of 4 billion Saudi riyal, with major investment activities in the capital market, real estate, alternative investment, and local and international. He's a board member of Da'am Real Estate Company, a board member of Al-Wafa Insurance Company, board member of the Rajhi Steel and head of its audit committee, as well as board member of Rajhi Heavy Industry and head of its finance committee. As also a frequent guest on the business channel in the region, and it's an honor to have him with us in the panel today. On the far end is Mr. Mohammed Al-Shitwi. He's currently the head of investment and cash management at the treasury sector within the Saudi Electricity Company. He holds a master's science in financial engineering, majoring in corporate finance, financial market from New York University, and Bachelor of Science in Finance from King Saud University, along with previous experience in corporate banking with the Rajhi Bank and Al-Hollandi. And if any corporate relationship manager out there, you got to make sure before you pick up the phone and make an appointment with him, because he's been on both sides of the transactions, if you like. To kickstart this panel on the liquidity, I have a couple of few questions here, and would like to start with Mr. Yasser to take his view on where you see the challenging in managing liquidity for the Saudi corporate in the Saudi market. So please, Mr. Yasser.
Thank you very much for having me. That's an interesting question. The main challenge is the perception of liquidity risk within the corporate paradigm. There is a great confusion between cash flow management and liquidity, and we have to make a distinction. Cash management paradigm procedure is making sure that the company is solvent and simply meeting the short-term, mid-term cash requirements, liabilities, if I may say. However, liquidity, which is the bigger picture, the bigger paradigm, is making sure that the company has the necessary funds to pursue its strategy, plans, and to withstand any unprecedented market situations, conditions that jeopardize the reputation and the ability of the corporates. Where we see much of the focus, at least to my knowledge, in the Saudi corporates is focusing on meeting the cash requirements or planning the financial strategy from that perspective without really pinning down the liquidity requirements and planning according to liquidity needs, liquidity ability, etc. And there we see also, for instance, the gap between the corporate paradigm space and the, for instance, the banking sectors when it comes to the cognition of risk management and the liquidity risk in particular. So there is a good and fair cash management in the corporate. However, liquidity is still far ahead, and there's a lot of measures and techniques that need to be taken by the Saudi corporates.
Thank you. Just to build on the technique, and I'd like to move to Mohammed. What steps you think within the Saudi corporate have been taken to seek and development and enhance liquidity solution product within the corporate market in Saudi?
Bismillah ar-Rahman ar-Rahim. I believe that Saudi corporates are trying to develop their source of financing in the market. So they have internal financing to their operations, and their liquidity should be balanced by external financing through the support of commercial banking. Also, they can be exposed to fixed income securities like sukuk and Islam and bonds in the market, as long as ECA is coming to the market from different aspects from USA and other regions. And I believe that a new innovation that will support any project finance company can be dealing with external financing, especially for example, Saudi Electricity. We have a history of issuing sukuk in the market since 2007. We issued 5 billion Saudi riyal in the market. Then we have been going out of the market to external financing and issuing sukuk. Latest was in USA. We issued Saudi US dollar of 2 billion and was the first Saudi company issuing sukuk for 30 years. And that was to match our power plant tenor, and it has a tenor of 25 years, and we want to match our liquidity through external financing. We went to states, their appetite was heavily to match our power plants tenor and financing us for longer tenor. As long we have supporting our cash position through the government subsidy, and government are giving us soft loans for 15 billion in 2000, and again they gave us 51 billion Saudi riyal in 2010, and that financing was designed to have a 15 years grace period and will be paid the loan after the year 15th. And that will give us much room in our liquidity to manage the power plant, and will be, once the power plant is in place and generate the power and utility, we can pay again our engagement and obligations. And I believe that our experience, we have been in ECAs for a long time, since 2006. We have an experience with a relation with ECA from COFAS in France, and US Exim Canadian and USA, also Korean, South Korean, and lately a joint venture with Korean and Japanese ECA. And this help us to maintain our cash position and to meet our obligations in a timeline that as long with the project completion is going. Also, we have an exposure to international markets. That means we will be financing through US dollar and also euro instruments. And that will have our cash flow comes from fixed and floating. And also our experience in going to the market previously, we have to do our credit rating. We are rated AA minus from Fitch and Standard & Poor's and Moody's. That's helped us to elaborate more and go into the market, external market. And that's, I believe, how we supported our company. And I believe that Saudi companies will continue and should be developed and be ready to go and leave the local market for international prospects.
Building on that, if I may bring Mr. Yasser on, I read recently on bigger transactions with your company, Manafi, with a UAE bank, for example, just to build up and enhancing the liquidity and existing outside the kingdom funding. Was this for a project in the UAE or as a project within Saudi? And is there a special in that structure of that particular transactions to enhance the liquidity at Manafi, for example?
Well, part of the liquidity plan, what I would say the prudent liquidity risk management, is to diversify the sources of funds. Therefore, we have to reach to different financial institutions, banks, diversify geographically, and as my colleague mentioned, across tools as well. So that was part of the diversification process. However, that's not all, because we're good. It's the whole prospectus in the Saudi market, the prosperity that we are seeing and living in the recent couple of years, where we see a number of GCC banks flocking into the Saudi market, approaching clients with a very lucrative deals and competing Saudi banks. So there are a couple of factors that really ending up with such a transaction as an example, which is the limitation of Saudi banks when it comes to additional leverage of their loan books, the opportunity in the Saudi markets that appeals and attempt GCC regional market to put that into perspective, and also the corporate initiatives and attempt to diversify sources of funds.
Interesting. Oh, Saudi bankers out there, take a big note. Moving back to Mohammed, you mentioned the innovative aspect of the liquidity accessing and the international market and the sukuk. Where do you see the regulatory playing part in enabling such enhancement or structuring such solutions? You know, the CMA of the world, the SAMA of the world, and even the rating agencies.
Actually, if you see the market, sukuk, fixed income securities market have been developed through Tadawul, and certain sukuk issuance are traded in the market, and there is low performance in the market, is not traded that much as stock market, because the awareness of individuals are not there, and that's why regulators are trying hard to push this. Even nowadays, we are seeing different corporates are issuing sukuk. For example, latest is SAB is currently issuing a sukuk in a private placement, and they have issued the Saudi Hollandi and Mara'i, and also Saudi Electricity and Sadara, Satur for their projects. So that means a fixed income business is developing and coming back to the market. And I believe SAMA have done a good solution to GACA issuance, which was above Saudi Riyal 20 billion. For 15 and above years. I'm not sure about the years, but GACA Sukuk was done because it's a government entity and it's backed by the Ministry of Finance. SAMA have approved to do a repo security to these Sukuk. That means any bank will participate in this Sukuk. they can go to the SAMA and reput and benefit from this tool. Also, this tool will help the issuer to reduce their spread and their financing cost. They will consider the creditability of the repo and consider it as a security held by SAMA. And also, I believe that credit rating agencies could be developed in the market through the CMA and enhanced Standard Poor's and Fitch to enter the market and trying to rate the companies itself. We should have tier 1 companies that should be rated, and tier 2 companies are rated in other factor. Also, CMA should have waived certain companies that have previously issued sukuk. For example, if we issued 6-7 sukuks, that means we have been exposed to international markets, we have done due diligence in the market, and we should be waived from certain items. And for example, if you do, most of Saudi companies are issuing nowadays a private placement because it takes, application will take only 40 days to be submitted and closing the deal. And public offering, you have to do a due diligence and applications and other forms that will take 3 to 4 months. And in reality, you cannot wait for projects to be implemented in reality, waiting for 4 months to have the fund there. I believe that CMA should waive certain companies, and SAMA should apply the repo to other securities, and classifying corporates through rating, and they should waive the public offering. And as we speak, we have a discussion with CMA trying to develop the market efficiently and giving us opportunity public offering. Because once a Saudi corporate is issuing a sukuk, they are not looking for financial institutions to participate, because this will eliminate their legal lending limit. As a company, I have a legal lending company, legal lending limit with the banks. So I have exposure with a certain bank, 5 billion. If he participated in the sukuk, it will go directly to the legal lending limit through SAMA. That's why we want to enhance individuals to participate in the market, and we are looking to issue a sukuk in the public, and want individuals to participate, enhancing the yield. Also, Saudi corporates are there. As a company, since we have a favor, and we are trying to participate in any corporate sukuk in the market, because we know that they need us to be there, not the financial institutions. And that's why most of the companies looking for this. And also, credit rating is not there in the market and should be developed. And I have attended a summit, was in March 2013, early of this year, through Standard Poor's, sponsored by Chairman Mr. Mohammed Al-Sharif and Standard and CMA. They are trying hard to do it, and it will take a certain time. I believe 2014 will have a different story in the market. Fixed income in the coming 5 years will be different, and all Saudi corporates will have the variety of going to the banks, local markets, and even to the fixed income market.
So you're not only creating innovative liquidity tools for your company, but also for the market, because talking to a lot of the companies, there is a huge cash in their balance sheet, and they're always looking for home for that cash, whether they invest in, in expansions or pay back to the shareholders and dividends terms. But there is a lot of potential appetite to look for investment. So if this sukuk could be, in the old days, sukuk, people hold it till maturity. They put it in the vault 5 years, and it's not traded across the whole GCC. So if these things pick up in the Saudi market and enable corporate to buy into this and trade it, will be fantastic. I guess it's all done over the counter now.
Yes.
There is no platform for
certain
that would be
companies.
nice.
Yeah.
Absolutely.
To have a platform in that aspect, where you see the bid offer prices, execute.
Secondary market, an active secondary market for sukuk. But if you allow me, I have reservations on the whole concept of sukuk.
Okay.
Just we're mixing the objectives. You should have a transparent, a solid company that are credit worthy, and then you sell your debt through sukuk, MDMs, etc.
As a custodian.
You have to have the proper setup.
Yeah.
And it's not the other way around. It's like Sukuk is the objective, and we have to work everything backwards.
Right.
Which is completely different mindset. It's an issue of culture. It's an issue of risk management. I see a huge risk, an underdeveloped concept of risk management, in particular with domestic sukuk. The question is, are the domestic sukuk priced fairly? I don't know. And I guess a lot don't know without having the proper benchmark.
So you would not buy them?
I won't touch it. There is no right benchmark reference in order to price the sukuk. Despite all the deficiencies, shortfalls in rating agencies, but that beside the point, that's irrelevant. You need to have a benchmark. Unfortunately, big corporates do exploit the opportunity that the market has an excess liquidity, and it's liquidity driven.
Right.
And whenever you issue, everyone will buy and it will be covered.
Oversupply.
Exactly. And they shy away from the international market. That's not all companies. Respectable companies, for instance, electricity company has a reputable and good rating.
Yes.
And exactly. SABIC and so on and so forth. So they invest heavily in the domestic market. They market their sukuk and they exploit the opportunity, the lack of knowledge, the transparency, the liquidity-driven mindset. However, that might create a bubble, and I would understand, I'm not sure whether that's a deliberate or not the situation of CMA and SAMA. We should not develop the secondary market unless we are ready to have such a market. And at the end, the prime objective is to protect investors and not vice versa. Yes, we want to develop the secondary market, liquidity, etc., but that's secondary to the investors and the integrity of the market. Where we start, we should really think seriously about rating agencies. We have to be transparent. Again, the objective is not to attain a particular rating, but to be credit worthy. And to make sure that we have the best risk management practices and benefit from the rating agencies' experience, long experience in developing proper risk management, which eventually should reflect on the cost of borrowing and the risk assessment of the company.
Hamad, would you like to add to that?
No.
Yeah. Now, given the low interest rate environment, how do you see Saudi corporate taking advantage of that when it comes to refinancing or expansion? Do you see this happening in a certain way, or is it happening, or it's not happening because they are cash rich?
Myself...
I mean, should you borrow now to do something in 3 years' time because the rate is down, the rate might goes up? What's your reading on?
Well, myself, I see it in two ways. I hold the position of investment, and also I manage the financing itself. In terms of financing, I believe it's a time to do a refinancing and restructure your financing, and also getting financing nowadays for longer tenor, and try to fix it and hedge it later on, because you will benefit from current low rates in the market, where we are seeing SIBOR 1 year is 1.1, and used to be in 2008 4 and somehow 5. And this will continue, the SIBOR and LIBOR will continue to grow in coming 5 years, and this time to refinance it. And through the investment side, we believe it's an opportunity to, there is not such an opportunity to invest in the market. And even for cash management positions, you cannot place deposit for certain years or more than 1 year, because the low rates are coming, and most of the attractive rates coming in the market through the banks because they are full of liquidity. It's not attractive. Nowadays, you can place 2.2% yield for deposits because window dressing aspects through the banks. They want to have capital adequacy ratio that is submitted to the SAMA and will have the regulatory affairs and ratios are in place. But it's a good time to go and for Sukuk and also going for long-term financing, especially for us. We believe it's a time to do financing because we have a huge project that costs of 40 billion. We need to finance it through our internal and government spending and also the Sukuk itself and commercial banking. But the issue with us is pricing. If you go to Euro market and LIBOR market, are much cheaper than nowadays here. And sometimes you can benefit from doing arbitrage because we are back to dollar. And we can financing from LIBOR and go into the market and benefit from having dollars in the market, and we can benefit in the current situations. But it's, I believe it's a good time to do it, especially for corporates with support of the banking. But the banking will shrink their profit nowadays because it's lower rates is not that attractive to them. They will not get involved in relation for more than 2-3 years. Medium term should be 3 years. Beyond that, 5 years, they will add and calculate all the aspects of interest rate raising.
I'm not going to ask you your review on the interest rate, but would you agree with some of the strategies, Yasser?
Well, I back up when it comes to taking an additional leverage. Unfortunately, interest rate is not tempting enough, or let me rephrase it. It's not the only factor or a major factor to expand your operations. Otherwise, the financial crisis would have been ended long time back. However, there are substantial and huge risks. Let's put the whole concept of risk management, liquidity before us. Try to avoid creating a bubble and think really wisely here. We have a geopolitical risk in the region. We have overpriced assets. Some might argue with the local shares, but I truly believe that we have overly priced assets. Still, the picture is not clear internationally, globally. There are signs of recovery, but they are not sufficient. Therefore, low interest rate is not appealing enough to take additional liquidity risk. Add to that, we are, in my view, we're very close to the end of the low interest environment cycle. I believe that in a year time or so, we'll start to see hiking of interest rates. Now, discussing how you position yourself accordingly, you can take loans and then you swap it, lock your rate. But we're talking liquidity risk. And I think it's time now to back up, reconsider the whole position, put all the factors together, and not be only solely driven by interest rates.
Thank you. You touch on the geopolitically, and you see the Arab Spring and the Eurozone ongoing issues with some of the major, obviously, countries in Europe. How do you see that impact on the Saudi corporate so far on liquidity? Does, for example, companies, exporter ask for an LC that they can use to finance themselves when they ship something to this region? Some of the corporate in Saudi who have exposure to the troubled countries like Egypt or Yemen and their receivables. Is anybody you see stepping in to fill that gap? I mean, some of this receivable goes over 6 months now. These companies are here exporting to some of these countries. Do you see somebody stepping, or do you see any tools offered by the banks to help some of these corporate who have an exposure to some of these troubled countries? Or they just shy away, basically they just shy away, but they still have receivable there.
Having receivable away, this is not a right way to do it, but I believe there is some issue involvement with Arab Springs and even Europe zone. And this will affect the banks itself, and they should consider their credit review applications, and they could consider their credit risk, and they should align it with the Arab Spring. Any action happens. I remember that when Japanese earthquake happened 2 years ago, all Japanese importers were hitting by the banks, and the bank have already managed their profile carefully and see where there is the impact on the balance sheet. Even Saudi government will ensure, the Saudi SAMA will ensure that there is no banks are affecting from certain action coming from the Arab Springs, and countries are not developed and seeing troubles like Libya and other companies we cannot mention. This is my view, I believe.
Thank you. Yasser, because mashallah, tabarakallah, you are diversified in different industry. I just want to link the product innovation so far, trade concern offered by the banks, and some of your business like the insurance. I guess, where you involve, your company is involved with the pharmaceutical on one hand and the hospital from the other side. So patient if you do medical insurance, that is. So the patient goes to the hospital to be treated, hospital have to pay the pharmaceutical, and the hospital have to claim from the insurance company. Do you see any solution out there in this market that link, for example, in a space of insurance, discounting the receivable for the hospital, for the insurance company, and so on and so forth? Is there like a healthcare trade finance structure in the market? Yeah. That in particular, I'm just picking up because I saw the insurance.
Insurance is separate than Manafi. However, let's talk about Manafi itself as a conglomerate, and we'll discuss if there are innovative products offered by the bank.
The banks.
Solutions.
Beside the term loan and the overdraft, that kind of stuff.
Well, unfortunately, there are very limited number of products, especially if we are talking about Islamic finance and the Sharia compliant products that actually reduces or limit the choices. However, financial sector, banks should develop more innovative products for trade finance, etc., that are Sharia compliant, which meet a big, a massive market segment.
Going back to the regulatory, how much do you hear about Basel II, Basel III from the bankers calling on you? I mean, is this something that they draw to your attention to, that some of the assets might be repriced, or obviously they have to increase their capital to accommodate for that when it does happen? Do you get, I don't live in Saudi, but I guess, is there like central bank and the banks talk to their client about the impact of such thing if it does happen?
Well, that's an interesting question, because the language is missing between corporate and banks, where corporate sees an advantage and aggressive growth might be envisaged negatively by banks. And the mechanism, at least the broad lines, the way in calculating for instance, the RAROC, or assessing the client, assessing the risk, that should be really communicated to the clients, are not clear, and banks tend to shy away. Not to mention the deficiencies in the banking sector in really assessing the risk according to Basel. We have to remember and put this into perspective that Basel is a tool, and it depends on the banks, their expertise, their experience in translating the rules and measures into actions and interpreting the data gathered for a client or for a particular sector. That is missing. Banks also, on the other hand, should achieve their target. So we have some sort of, I would say, a potential conflict of interest case. You have banks that want to achieve the plan, achieve the targets. On the other hand, the proper risk management assessment, I don't see the line. I don't see the proper communication to clients. I would link that to your earlier questions with regards to sukuk and pricing sukuk, and with the absence of third-party, independent party that help you in assessing the risk, I see a challenging assignment and mission for banks. And guess what? The banks comes to me and tells me that your pricing is such and such because of Basel requirements, etc., etc. Well, sorry, we have dozens of banks opening their books, and they are liquidity-driven and profit-driven. So yes, it's really challenging, and language is very important in this manner.
Thank you. Let's open the floor now, take questions to the two distinguished gentlemen here. And I appreciate it if you just say at least your name and your company, or you just say you're from the police. You get a better answer. So any questions from the floor?
Yep, thank you for the discussion. My name is Sasaki. I'm from Sumitomo Mitsui Banking Corporation. In terms of the trade finance and the liquidity management, I want to ask both gentlemen, what do you think, what should be the, what kind of the role or products do you expect to international banks?
Would you repeat again, please?
What, in terms of the trade finance and the liquidity management, what kind of roles and products are you expecting to the international banks?
From the international banks?
Yes.
Through that liquidity and trade finance?
Yes, in terms of trade finance and the liquidity management. So
Well,
what kind of role are you expecting the international banks?
From trade finance, we are exposed to international ECAs, especially from Japan and Korea and COFAS in France, and Canadian and from USA, US Exim. We are exposed to financing mainly in the company itself. And what we are seeing, they are funding their exporters in their countries to send their equipment, since we are a power plant and utility business, that they are supporting us and giving us flexibility how to pay back to the lenders, that we will enhance their exporters to send their equipment to our market, and you will use it in our power plants, especially for our concern. In liquidity management, we should consider their hedging prospects, that we are exposed to different currencies. For example, US dollar and other euro and Japanese yen, that we can have a relation and hedge our exposure for our sukuk through interest rates payment, and also the foreign payments to the contractors. Also, since we have a company and a variety of contractors vary from Saudi and international contractors. I believe this hedging prospect from treasury point of view, and also the financing from ECAs and others.
Thank you.
Thank you. You will have 5 proposals now from Sumitomo Bank in your desk by the time you get to the office. Any other question?
Assalamu alaikum.
Yasser, would you like to add to the
Yes,
international
fine,
bank?
thank you.
Fine.
Sure.
Tafadhal.
Yeah, Assalamu alaikum.
Yes, Salam.
My name is Ibrahim Misawi from Al-Hamrani Fuchs. I just would like to, if you can give some details about the, see, we are hearing here material amounts of billions about from sukuk, etc. So what is the plan? Are you planning, how you are planning to repay that in 5, 10 years or 15 years, as you have mentioned?
In SAC, how we plan to repay back our sukuk. So far, we have an exposure of 20 billion Saudi riyal, equivalent to Saudi riyal 20 billion. And this is matured, some are matured in coming year, and others are maturing in 10 years, 7 years, 10 up to the latest one is maturing in sometimes 2043. So we are planning to, as long as a company, we have this subsidy tariff that we are producing our electricity kilowatt an average of 12 halala, and we are selling to consumers in 8 halala. That's mean in our business that we are producing utility and power, and we sell it to the market lower because the government had decided to sell it in this certain level. How we will refinance within the government's support. They will support us in giving us the cash flow and supporting our debt, and they have assured all the international participants in our sukuk they will back the company in their cash flow. However, we can pay from our internal revenue and operations, but the problem is our expansion is huge. You cannot imagine that we are, for example, there is a city in north of Saudi Arabia named Tabarjal. Tabarjal used to be a city, used to be a village. It has like 10,000 population. And they used to have electricity from the nearest city over there, and was 100 megawatt. Nowadays, they are having 60,000 population, and the population are getting very high, and growth is not acceptable at that level. And we couldn't notice that. We are planning our projects based on the results coming from them. But there is a lack of power, lack of electricity. Our projects need to be done through the 10 years ahead, I believe so, around 700 billion Saudi riyal. That we have to enhance all power plants in the market. We will spend 700 billion in power plants, enhancing our previous projects. For example, we have a power plant, 3 power plants in Riyadh. They are almost nowadays 40 years old. So we have to renovate it and develop new power plants, and also not utilizing the heavy oil and trying to develop the gasoline, also the solar and nuclear power plants and other solutions come. Also with the line with King Abdullah Commission for Power and Utilities, they are trying hard for 200 billion to do certain power plants in the market. And sukuk is one of the main driven instruments that could help us. And I believe the mechanism of sukuk could be raised in certain year and pay back and refinancing again. So once we have an obligation and maturity in 2014 for 7 billion, we could have a solution that we raise a fund for 10 years again to match our power plants. The mismatching between SEC and the banks, we have power plants tenure and age is for 25 years. No banks could finance more than 7 years. That would be risky for them. They should. That's why we went to another solutions with sukuk. Sukuk will have flexibility to give us 30 years. Even US market has a very appetite to develop 30 years in the market. And we went there in April, and we have 20 plus subscriptions to our sukuk. We requested 20 billion and we received 10 billion, but we took only 2 billion. And nowadays we will go this coming month to Far East in Singapore and Japan and Korea and Malaysia to see a non-deal roadshow. How is the Far East appetite to our sukuk, because they see SEC and the government itself as a sovereign company, and the government it's a oil producer, and they have a huge surplus of cash and potential of contractors. The company so far, the kingdom so far, is being constructed for 3 years, 4 years, and will continue so on. As long as there is an infrastructure, we see ourselves as an infrastructure company that will require long-term financing. We're not looking for working capital financing that's only for 1 and 2 years. Does that answer your question?
One more last questions. We run out. Yeah, go ahead.
Just a simple question, and how do you see, as a business side, from the business side, like the banks in general can convey their challenge or the challenges that they face from like complying with the new regulations and all of this? How you see like the banks can convey those challenges and how to be reflected to you as a customers or a corporate customers in terms of pricing or in terms of like length of a process. Like, what is the best way for you as a customer for a bank, you think, that you would receive the message from the banks? Like that, for example, Basel III, it creates more cost for us, for example, to raise capital or something. So this would be passed eventually to the customers. Like, what way we can convey those messages to the corporate side? Like, what way? Thank you.
That's an interesting question. The competition is huge in the banking sector. Certain banks are exploiting the opportunity and arbitraging the Basel III, whatever regulations, to their advantage. Certain banks meet their or strained by regulations, by ratios, etc. Other banks, regional banks, and to some extent international banks are willing to take additional risk, are less sensitive to compliance, and therefore bridging the gap. However, what we are seeing now, the emerging financing parties are private equities, family offices. So the form of funds are shifting from banks into private equity companies, families. There is abundance of liquidity in the system. What we're witnessing now in the US, for instance, a bigger problem, which is the Volcker rule, etc., and the application, the advent of Volcker rule. And that's to the advantage, again, to the private equities, family offices, etc., to have another form of financing. Sukuk would be one way, one alternative for financing. So it's not a dead end. It's a pressure on banks. Banks are finding their way to maneuver, arbitrage to some extent, and I'm talking legally, putting pressure back on Basel to lose some of the regulations.
Correct.
Unfortunately, or whether fortunately, a number of countries are not complying with Basel III. And there's a big debate. It's a big philosophical debate. Basel is good when it comes to controlling risk on developed countries, banks that created the whole financial havoc. But they might not be suitable for emerging markets, for developing more. There's a huge kind of givens, infrastructure, etc., factors that have to be considered. So it's a matter of application. We should not be driven solely and be dazzled by Basel III. Funds are available. Competition is being even stiffer now. So tough luck to Basel and those who are taking Basel by the book.
I mean, even international banks are trying to lobby to have their say on, especially when it comes to trade finance. We'll have to stop it here. Thank you very much, Yasser, and thank you very much, Mohammed, for your time and contributions. It's been excellent. Thank you, gentlemen, for all your participation as well. Give them a round of applause for the panelists, please.
Thank you very much.
Thank you very much.
يعطيك العافيه والله سعيد تعرفنا عليك. محمد يعطيك العافيه يا اخي. شكرا.